This video is a review of Sony's fiscal year 2024 first half financial results, the period from April 2024 to September 2024. Sony Group Corporation is a Japanese multinational conglomerate known for its innovative electronics, PlayStation gaming consoles, entertainment, and cutting-edge imaging technologies, making it a global leader in technology and media industries. Quarter 2, fiscal year 2024, consolidated results. Consolidated sales excluding the financial services segment for the quarter increased 9% compared to the same quarter of the previous fiscal year to 2,973.4 billion yen. Operating income increased 57% to 389.3 billion yen, a record high for the second quarter and the first half of the fiscal year. Consolidated sales, including the financial services segment, increased 3% year-on-year to 2,905.6 billion yen. Operating income increased 73% to 455.1 billion yen, a record high for the second quarter, and net income increased 69% to 338.5 billion yen. Progress rate against the annual net profit forecast of 980 billion yen is 58.2%, and it is going well. FY2024 consolidated results forecast. Consolidated sales excluding the financial services segment have been increased slightly from the previous forecast to 11,800 billion yen. Operating income is unchanged at 1,165 billion yen, and operating cash flow has been increased 40 billion yen to 1,440 billion yen. Consolidated sales, including the financial services segment, have been increased slightly from the previous forecast to 12,710 billion yen. Operating income and net income are unchanged at 1,310 billion yen and 980 billion yen respectively. Net profit progress rate is 58% already, and most likely the forecast will be achieved. Quarter 2, fiscal year 2024. Results by segment. Sales and operating income from game and network services segment and imaging and sensing solutions segment have significantly increased. Game and network services segment sales for the quarter increased 12% year-on-year to 1,071.5 billion yen, primarily due to an increase in third-party software sales, despite a decrease in hardware sales. Operating income increased 184% year-on-year to 138.8 billion yen, a new record high for this segment in the second quarter, due to an increase in the profit of hardware, third-party software, and network services. Imaging and sensing solutions segment. Sales for the quarter increased 32% year-on-year to 535.6 billion yen, primarily due to increased sales of image sensors for mobile products and the impact of foreign exchange rates. Operating income approximately doubled year-on-year to 92.4 billion yen, primarily due to the benefit of the increased sales and the favorable impact of foreign exchange rates. These two segments contributed significantly to consolidated profits. Game and network services segment. Sales for the quarter increased 12% year-on-year to 1,071.5 billion yen, and operating income increased 184% year-on-year to 138.8 billion yen, a new record high. Full-year forecast for sales has increased 4% from the previous forecast to 4,490 billion yen. Full-year operating income is expected to increase 11% to 355 billion yen, a new record high for profit for this segment. Platform Business Group. The Platform Business Group reported strong growth, with PlayStation monthly active users reaching 116 million in September, an 8% year-over-year increase for the 8th consecutive quarter, and total playtime rising 14% year-on-year. PlayStation Plus revenue grew 18%, driven by higher ARP, average revenue per user from tier upgrades and price revisions, while third-party software sales surged, supported by popular franchise titles and new hits, including a sports title and an action RPG from China. Studio Business Group. The Studio Business Group reported strong performance with the release of Astro Bot, which achieved a Metacritic score of 94, sold over 1.5 million copies in 9 weeks, and significantly expanded the user base, with 37% of buyers being new to first-party titles. The game also attracted a younger and family-oriented audience. This year, the group launched 2 live service games, Helldivers 2, a major success, and Conquered, which was discontinued. Sony plans to build a balanced portfolio of single-player games and live service games with growth potential during the current mid-range plan period. Game and network services. The platform business shows strong momentum, with stable growth in user engagement and revenue anticipated in the second half and beyond. While studio business sales and profits are expected to decline compared to last year's strong performance with titles like Marvel's Spider-Man 2 and Helldivers 2, progress continues in new title development and live service game optimization. From next fiscal year, major single-player titles will be released annually, starting with Ghost of Yotei, the sequel to Ghost of Tsushima. Music segment. Sales for the quarter increased 10% year-on-year to 448.2 billion yen, and operating income increased 12% to 90.4 billion yen, primarily due to an increase in live performance, merchandising, and licensing revenues, as well as streaming revenue. Streaming revenue for the quarter increased 9% year-on-year for both recorded music and music publishing, a 5% and 6% increase respectively on a US dollar basis. The FY2024 forecast remains unchanged from the previous forecast. Sony Music is expanding globally in fast-growing streaming markets, including emerging regions through digital distribution and artist services like The Orchard. In mature streaming markets, catalog music consumption is rising, with catalog music over 18 months old comprising 73% of the U.S. recorded music market, and songs over 10 years old now accounting for over 20% of Spotify's global top 200 as of July 2024, up from under 5% in 2020. This growth is driven by shifts in user demographics and discovery via social media. Pictures segment. Sales in the quarter declined 11% year-on-year to 355.8 billion yen, mainly due to fewer television program deliveries, partly impacted by last year's strikes. Operating income fell 37% year-on-year to 18.5 billion yen due to the sales decrease. For fiscal year 2024, sales are forecast to slightly decrease to 1.51 trillion yen, with operating income expected to decline 8% to 115 billion yen, reflecting a downward revision driven primarily by weaker results in the India Media Networks business. In motion pictures, it ends with us exceeded box office expectations after its August 9th release, boosting quarterly results. Major releases like Bad Boys, Ride or Die in June, and Venom, The Last Dance last month signal recovery from the impact of strikes, with television and streaming revenues expected to rebound in the fiscal year's second half. Crunchyroll, streaming platform that offers anime and manga, is expanding its global presence through partnerships with Amazon Prime Video and YouTube, while streaming new anime titles to enhance fan engagement. In India, despite a weak advertising market and declining pay TV viewership, a new management team is driving operational improvements and long-term growth strategies. Entertainment, technology, and services segment. Sales for the quarter were 619.8 billion yen, essentially flat year-on-year. Operating income increased 15% year-on-year to 70.2 billion yen, mainly due to the favorable impact of foreign exchange rates and cost reduction effects. The FY2024 forecast remains unchanged from the previous forecast. In entertainment, technology, and services, major markets like North America, Europe, China, and Japan remain stable during the quarter, enabling operating income to exceed the same quarter of the previous fiscal year. While overall segment sales were flat year-on-year, inventory was reduced by approximately 10% by the end of the quarter. However, the imaging business, which saw significant growth in the first quarter, was flat year-on-year this quarter, prompting a more cautious production and inventory plan ahead of the year-end selling season. Imaging and Sensing Solutions segment. Sales for the quarter increased 32% year-on-year to 535.6 billion yen, and operating income approximately doubled year-on-year to 92.4 billion yen. For fiscal year 2024, sales is forecasted to decrease 4% from the previous forecast to 1,770 billion yen, and operating income to decrease 9% to 250 billion yen. Imaging and Sensing Solutions. The global smartphone market is gradually recovering, with year-on-year growth in China and Europe and signs of recovery in North America. Mobile sensor sales significantly increased this quarter due to higher unit prices from larger die sizes and strong shipments to a major customer, resulting in record second quarter sales for the segment. However, sales and profit forecasts for mobile sensors in the second half have been revised downward due to adjustments in a major customer's production plan. While the rollout of AI functionality in smartphones may cause short-term volatility in the high-end market, it is expected to drive long-term growth and a shift to high-end products. Production yields for mobile sensors are improving as planned, with normal run rates anticipated by the fourth quarter of fiscal year 2024. Financial Services segment. Financial services revenue for the quarter decreased 167.2 billion yen year-on-year to negative 63.3 billion yen, primarily due to the impact of market fluctuations at Sony Life. This was due to the significant appreciation of the yen during the quarter, which led to a significant decrease in the yen-based valuation of assets under management for foreign currency-denominated insurance. Operating income increased 50.1 billion yen year-on-year to 65.7 billion yen, primarily due to the impact of interest rate fluctuations at Sony Life. Sony Life's insurance service results, the foundation of its profitability, remained stable at 49 billion yen, with the FY2024 forecast unchanged from previous projections. Considering acquisition of publisher Kadokawa, Sony is reportedly in discussions to acquire Kadokawa Corporation, a major Japanese media company known for its involvement in publishing, anime, and gaming, including the globally successful title Elden Ring. This move aligns with Sony's strategy to expand its entertainment portfolio and strengthen its presence in the gaming and media industries. Sony already owns a 2% stake in Kadokawa, as well as a stake in From Software, Kadokawa's subsidiary and the developer of Elden Ring. Elden Ring has received critical acclaim for its atmospheric world, innovative gameplay, and narrative depth. The game has sold over 25 million units worldwide, making it one of the most successful titles in recent years. Talks between Sony and Kadokawa are ongoing. If successful, the acquisition would significantly bolster Sony's gaming and media capabilities, leveraging Kadokawa's diverse assets and expertise to enhance its global entertainment offerings. Stock price. This is the Japanese yen-based chart for the last 1 year. Japanese stock price is 3,462 yen as of December 12th, and the US dollar stock price is $22.17 per share as of December 11th. Current PBR is 2.62 and PER is 20.6. Dividend yield is 0.59%. Compared to the last few years, PBR and PER show that current stock price is relatively higher. Dividend yield is about the same as past, since the dividend amount has been increasing. Stock price has been soaring since the recent financial results announcement and the news about Kadokawa acquisition attempt. Conclusion. Annual operating income is forecasted to be record high, and this fiscal year's earnings per share of 162.9 yen is also the same level as the highest profit. Dividend amount has been increasing every year, and revenue and profits are very stable. If the acquisition of Kadokawa is realized, the profits of the game business are expected to further improve. Second quarter financial results exceeded market consensus and expected to continue.